Every B2B healthcare vendor is chasing growth, but far too many are trying to fill a leaky bucket because their go-to-market strategy is fundamentally broken. It's so easy to get caught up chasing new logos, but if you don't have internal clarity on who your ideal customer really is, you're just acquiring future churn. A true go to market strategy doesn't start with a flashy campaign. It starts instead by looking hard at the customers that are easiest to get, to keep, and to grow with. Joining me on the program today is Alan Gonsenhauser, founder and CEO of Demand Revenue. He's going to talk about building a go to market engine that actually yields results. We dig into his 8-pillar go-to-market operating system, why fixing churn is the absolute first step you need to take, and the exact data points you should use to define your true ideal customer. Let's get to it.
Swaay.Health.
Alan, welcome back to the program.
Thank you, Colin. How are you?
I am great. It is always a pleasure to see you. I see you all over social media. It's great to see you now on the show.
Great to be back.
So, Alan, we're going to talk about something today that I think is quite interesting. It's not something we've talked about before, so I'm excited to dive into it with you. And that, of course, is go-to-market strategy.
Yes.
So Alan, talk to me about the challenges. What are some of the challenges of go-to-market right now that companies are facing?
You know, I, being a chief marketing officer a number of times and a go-to-market P&L general manager, I spent 6 years with Serious Decisions in Forrester, mentoring and coaching CMOs, over 100. And I see the same challenges coming up again and again and again. And go-to-market clarity is a big issue. So one stat I'll mention, one of the founders of Serious Decisions at the beginning did a study of 400 B2B companies. And they found that companies that are well aligned between marketing, sales, product, customer success functions, and stay aligned, grow 19% faster and are 15% more profitable. And it's as true now as it was then. I've seen in over 100 companies alignment issues where, the impediment to growth and profitability is the ability to get everybody on the same page. And, beyond that, I can mention some other stats. I work with an organization closely called Go-to-Market Partners. And one of the stats is, what's the one thing keeping companies from hitting their business goals? And it's internal go-to-market clarity, 68%. Only 28% market conditions. But internal go-to-market clarity is a big impediment to growth, consistent with that statistic I just mentioned as well. And a lot of it is companies that just, marketing, sales, product don't talk to each other. They don't have the same metrics. I see a lot of issues with companies trying to figure out and govern their ideal customer profile. And that is a huge enabler to efficiency and efficient and intelligent growth. And I see a lot of companies choose their ideal customer profile, if in fact they do, by, the CEO thinks we should get in this market, or that market is growing a lot, or, this is the percent of revenue that we did last year, or these are the easiest deals to close. But I find the way to figure out your ICP, if you're at a certain point and you have customers and you've had customers and you've got some clean data, take a look at the customer cohorts and look at 3 things. Number 1, look at the win-loss ratios. How easy are customers to get? Then look at the gross revenue retention. How easy are customers to keep? And then look at the net revenue retention. how easy are customers to grow. So if you can triangulate those customers that are easiest to get, keep, and grow, that's a really good beginning to look at different segment cohorts into which segments will be the most profitable and grow the fastest. And, that assumes that you've got enough gross margin, right, for each of those segments. So that's number one. And then you need to look at the segments in terms of, are there headwinds, tailwinds, are they growing, are they spending money? So how attractive externally are some of these segments? And then how well set up are you to be successful? Your internal capabilities. Do you have the right products? Do you have the right value proposition? Do you have the right sales channels of distribution? Do you have the right data so you know who you can find people in market? So it's then taking, those cohorts that you can get, keep, and grow the quickest, looking at the external market attractiveness, your internal capabilities to be successful. And obviously, if there's great market external movement and you're very well set up to be successful, you resource those first. If there are great market opportunities, but you don't quite have the internal capabilities, you pause until you build those capabilities before you invest in the market. If the market isn't growing that much, but you're doing really well, you farm the base. And if neither is true, you don't put any energy on those segments. Does that make sense?
I think it does, Alan. You're pointing out of many things there in your answer, all great. But I can't help but wonder, Alan. Like you mentioned, like misalignment. That's a big thing. You mentioned that the fact that people are choosing the wrong ICP.
Yeah.
That's been known. I mean, what I'm getting at is these problems aren't new, right? Ever since marketing has existed, these are problems, especially the misalignment between, let's say, marketing and sales, for example. Like,
right.
In your opinion, Alan, like, why haven't these challenges been addressed already?
There are political issues as well. For example, choosing an ICP needs to be cross-functional. It can't just be a marketing project. You have to have buy-in. And the best is when you have it CEO on down of which ICPs make the most sense and why, and doing it the right way. But even if you do that, there are also governance issues. Because everybody may agree on this ICP, but what happens when you're trying to make the quarter? See, sales may acquire anything that isn't nailed down. Anybody with a pulse in a business card, or, they need to make their quarter. So it's very difficult to say, well, this isn't in the ICP, but success is based on quarterly targets. So having the governance to say, look, we don't think we can retain and grow these types of customers. Or, yeah, these are great names. They would be great logos if we got these elephants, but we're spending so much energy, it's very unlikely we're going to get them. And even if we got them, we couldn't, we wouldn't be able to retain and grow them. So it comes down to cross-functional alignment from the CEO, the C-suite on down, a cross-functional decision on what the ICPs are. And the benefits are, if you stick to that, you'll be able to forecast your sales much more accurately. You'll have customers that will stay with you. They'll be a lot happier, and you'll be able to grow them. But a lot of dysfunctional things happen when you're trying to make the quarter. And there's a lot of pressure, let's say, from the private equity or VC. And, and maybe there are exceptions. But if there are exceptions, everybody should know that, yeah, maybe we didn't quite get the ICP right. And, if these are customers who really think we can keep and grow, then maybe you do make an exception. But you do that with knowledge and with agreement. Does that help?
It does. I mean, and I think you pointed out a couple of things there, right? When you don't have your go-to-market correct, you're landing a new customer is harder, and then retaining them and growing them is harder. I mean, I like that you talk about that. So let me reverse that thinking for a second and ask you, Alan, like when you get your go-to-market right, what does that feel like at the company? What becomes easier? Is it just a revenue that goes up? Like, how does that feel when your go-to-market is correct?
When your go-to-market is correct, you're not going to have as many churn issues that hit customer success. You will be able to retain and grow your customers better. You're going to have happier customers. Your net promoter score is going to be improving over time. And you're not going to have to be doing as much explaining. Yeah, we brought on these customers, but they churned out. So the first thing I normally look at when I work with a company is what is the level of churn? And how much of churn is controllable? And really successful companies have a net revenue retention of 120% or more. If your NRR is 120% or more, and you've got the right gross margins, you've got a very successful company. You know, when I see gross revenue retention, say 80 or 90, and then net revenue below 100, there's still work to be done, and even lower. You know, I look at churn first because churn is an impact of not having a really aligned go-to-market function. So this is really important. It's not easy work to do, but it's really important to do, and there are huge benefits. Just makes everything easier. Everybody wants to have happy customers, right? That grow with you, right? And if you think about bringing on customers that you keep and you grow, that has more, and lowering churn, that has more of an impact on your future financial results. Excuse me, than almost anything else.
It's like the flywheel, right? Like once you get it going, it can start to build its own momentum, much like when you have happy customers, they build your momentum for your business, right? You're not working as hard to keep the revenue flowing. You can then focus on growing the top line a lot more with new customers and so forth, not having to worry about the back end churning out. That's a really great point. So Alan, you mentioned to me before we got on air here something called a go-to-market operating system.
Yes.
Can you describe what that is?
I'd be happy to. So there's 8 pieces to it. It's like a wheel, and I'll show you. So it starts with where can you grow the most? And that's figuring out your ICP. That's what we've been talking about. So determining your ICP, how you figure it out, and how you govern your ICP. Then the next is which products create the highest customer value. How do you prioritize your products so you're creating more value to your customers and you're driving revenue more efficiently? The next is how do you engage your customers with a differentiated brand position and point of view? How does your product pass the so what test in terms of the jobs that customers are trying to get done, what their pain points are, and how your products help customers do their jobs faster, more efficiently, more accurately, you name it, benefits. The next is which go-to-market motions get you to your revenue goal the fastest. Are you big on product level growth or channel level growth, customer level growth? What are the different models that drive revenue and profitability for your business? The next one is looking not just at your return on investment, but what is the return on investment in the customer's mind? What do they care about? How do you onboard customers? How do you quickly show the value of your products and services to customers? The next one is how do you retain and upserve your customers? Upsell and cross-sell. How do you drive more business out of existing customers? Just 2 more. The next one is, which go-to-market metrics drive your business health? What are the metrics like net revenue retention or lifetime value to customer acquisition cost? What are the metrics that really holistically drive success across your functions? And then finally, how do you give your team clarity, alignment, and trust? So there are 8 kind of sections or pillars to this go-to-market operating system. And, companies generally don't have a marketing problem or a sales problem or a product problem. They have a go-to-market problem, an alignment problem. Organizations working together to drive more productive revenue growth and profitability.
So first of all, Alan, thank you for that. That's that wheel makes it pretty clear. This is a lot, right? We've talked a lot about misalignment. We've talked about CEO on downwards. You've got to get agreement. Let's not even call it alignment, just agreement on who your ICP is and your strategies and so forth. Obviously, sales and marketing have to get together along with people who fulfill. Like you call it, customer success, for example.
Yes.
This is a lot. This is a big task.
And finance. Yep.
And finance, of course. This is a big task. So where do you recommend people should start? Like, where should I start nibbling at this, Alan? Like, and therefore, who listening or watching this, what can they do tomorrow, essentially?
Where I like to start is figuring out if there's a churn problem or not. If there is a churn problem, that usually points to upmarket issues with alignment. And churn, it can be really negative in terms of growth, profitability, and your brand. The other thing, brand is coming back, and there's really good reason for it. A lot of companies over-rotate on demand, short-term demand, and only at any given time, only 5% of companies are in market to buy something at any given time. 95% are not in market now, but they are consuming content, and they're developing short lists of vendors they will consider when they do go in market, maybe 12 or 18 months from now. So if you're not educating the market on your brand and why you have a meaningful point of difference, if you don't get on those short lists, you're not even going to be considered when they do get in market. So companies need to think about brand awareness and preference in addition to demand, and take a look at, see if there's a churn issue, see if there's an alignment issue. A lot of companies may think they're aligned, but don't operate that way. What governance is there? Do you modify commissions if sales brings on out of ICP deals? And if not, should you? Or just accept everything that comes in, knowing that they may be bringing on debt rather than long-term revenue and financial performance. These are not easy questions, but they're very, very important to work through to drive success within companies.
I like that you started with churn, because I think that's an easy number for marketing to get their hands on. And it's easy for a company to get their hands on, right? Because you should be feeling that if you're having a high churn. Conversely, you might not look at it if you were doing well, but in which case that's probably likely because your churn is low, is the way you're pointing it. So I like that that's an easy place for people to start to identify if they've got a problem there. Because look
at your gross and net revenue retention numbers.
Right. Yep. Right. Well, because what I'm hearing from you, Alan, is if you don't fix that, then the rest of it doesn't fall into place very easily. I mean, you could have alignment between sales and marketing, but if your churn is really high, essentially it doesn't matter because you're just putting water into a sieve, right? Like
exactly.
So I like that you're saying start with that problem first, and if you don't have a problem, good for you. Now move on and get into alignment and some of these other I'll call it higher level challenges. Yeah. But if you don't get that one right, you're toast.
and if you're take a look and see how often you're on short lists of people buying stuff that you sell. If they know your brand and you get on short lists early on, 95% of the time, the winner is on that short list. So if you do get on short lists sufficiently, you're going to have more at-bats, you're going to have a better win-loss ratio, and you're going to have more pricing power. So all these things kind of come together. I mean, to me, a lot of it is common sense, but even these common sense things are often very difficult.
Yeah, I think it's the one thing that marketers loathe to hear most from salespeople, and that is, we weren't even at the table. Like, this deal happened, exactly. It's in our space, it's the right kind of customer, and we weren't even invited. That, to me, is not a sales problem. That is clearly a market and a marketing problem, because you should have been doing all of that brand awareness and to get on that list.
And I agree with you, but I would maybe modify it a little different. I'd say it's a brand problem, but a brand problem is a corporate problem. Maybe marketing can't invest as much in brand because the rest of the C-suite doesn't think it's important to put money there. They want to put too much in in demand, which is just 5% of the people that are looking now. You
Good
know?
point. Great
So
point.
it's yeah, bigger than marketing. Marketing may want to invest in brand, they may not be able to.
That's a very, very good call out, Alan. You're right. Even though we should, sometimes we can't because the
Yeah.
budget goes somewhere else. Wow, Alan, you've shared a ton of great information with us today. Where can people go, Alan, to connect with you and learn more
Sure.
about demand revenue?
So difficult to spell my last name. So you can go to my website is demandrevenue.com, just how it sounds. And my email is ag@demandrevenue.com.
Excellent. And of course, they can always connect with you on LinkedIn as well. We'll put the link
Yes.
down below. But Alan, always a pleasure. You always share such great information when you're on the show. Appreciate the time.
No, my pleasure. What I love to do is mentor and coach chief marketing officers or help with projects. And also, private equity brings me on sometimes as an interim chief marketing officer when there's a gap in leadership, which I also love doing. So that's what I do. So thank you, Colin. Always a pleasure to be on the show.
Hey, I really want to thank Alan for sharing his go-to-market operating system with me. I thought his comments about taking the time to truly dig deep into your ideal customer profile and how to address customer churn as priority one was spot on. Because if you don't address those two things, you won't get very far in your go-to-market. And hey, if you made it this far in the video, please, we'd really appreciate it if you mash that like button and click subscribe. Also, head over to Swaay.Health, that's Sway with 2 A's, .health, where you will find more great content like this. I'm Colin Hung. Thanks for watching, and I'll catch you on the next video.